President Trump has imposed tariffs on clothing and footwear imports, with China, Vietnam, and Bangladesh the major suppliers for almost 97% of all U.S. apparel from abroad. The U.S. consumers are going to face a price hike of up to 87% on shoes and 65% on apparel in the coming 3 years. In simple language, your favorite Nike shoes might cost nearly double the price you get now. Sounds crazy, right? In fact, not only big brands like Nike or Adidas get affected, but even small retailers and local brands will feel the pinch. How did we get here? What are the long-term consequences of these tariffs, and what does this mean for your wallet? The tariff impact. The U.S. apparel industry, already heavily dependent on foreign imports, is about to face a major price surge due to Trump's tariffs. As of April 9, 2025, the U.S. imposed a 10% universal tariff on clothing imports, targeting countries like Vietnam, Bangladesh, Cambodia, and China. For countries with high trade surpluses, the tariff hike is even steeper. For instance, Cambodia faces an eye-popping 49% tariff, while Bangladesh is hit with a 37% tariff. But what's really shocking is the impact of China, with a 145% tariff on many of its products, which includes footwear and apparel. This tariff strategy, designed to bring more manufacturing back to the U.S., is putting a massive strain on the global supply chain. With 97% of U.S. clothing and footwear coming from abroad, the rise in costs is inevitable. The shift of production to Asia. The rise of tariffs has also pushed many U.S. companies to shift production from China to Southeast Asia. Countries like Vietnam and Bangladesh have become major beneficiaries of this strategy. In fact, Vietnam is now the second largest apparel and footwear supplier after China. Companies like Nike and Adidas have relied heavily on these countries for manufacturing, with Vietnam contributing 50% of Nike's shoes and 32% of Adidas's footwear. But even these countries aren't immune. With higher tariffs, these manufacturing hubs face the possibility of rising production costs, which will inevitably be passed on to American consumers. The big players, Nike, Adidas, and Lululemon. The impact of these tariffs is not just theoretical, it's already being felt by major fashion brands. Nike, for instance, relies heavily on factories in Vietnam, with 50% of its shoes and 28% of its apparel produced there. Adidas's heavy dependence on Vietnam for footwear means that it too is at risk of price increases. In fact, 38% of Adidas's shoes come from Vietnam, and if tariffs remain high, the price tags on these products will soar. Lululemon, another major player, faces similar challenges, with 40% of its products made in Vietnam. As these brands are forced to absorb higher production costs, prices are expected to rise dramatically. Nike's shoes, for example, are projected to increase by a staggering 87% over the next 3 years. The economic ripple effect. While big brands are absorbing the shock for now, small businesses and independent retailers will likely feel the brunt of the tariff storm. These smaller players have less negotiating power and are more likely to pass the full increase onto consumers. This means that over the next few years, everyday Americans could be looking at paying substantially higher prices for clothing and footwear. And the impact on American consumers. Imagine this. A pair of Nike sneakers, which might have cost $100, now cost $187. A shirt that once retailed for $30, expect to pay $50 or more. The U.S. consumer, already facing a volatile economic climate, is about to feel the pinch. The Yale University Budget Lab analysis estimates that U.S. consumers will pay an average of 87% more for shoes and 65% more for apparel over the next 3 years. Even though prices might stabilize after this period, they're expected to remain 29% higher for shoes and 25% higher for apparel. The end of discount shopping, Temu, Shein, and the de minimis loophole. It's not just the price increases in stores that are a problem. Online shopping platforms like Temu and Shein, which have grown in popularity due to their low-cost imports from China, will also be hit hard. The de minimis tariff loophole, which allows packages worth up to $800 to enter the U.S. duty-free, is set to end for goods coming from China and Hong Kong. Starting May 2, 2025, consumers can expect to pay additional taxes on their discount shopping. This is a major blow to companies like Shein, which have built their US market presence on the back of low-cost imports. While Shein has already made moves to diversify its production by opening new lines in Vietnam, this decision was met with resistance from the Chinese government. They have even pushed back against Shein's efforts to move production out of China, creating a complex geopolitical issue within the supply chain. The global trade war and its escalating tensions. The clothing tariff battle is part of a broader economic conflict, the US-China trade war. What began as an effort to protect American jobs and industries has snowballed into a global economic war with far-reaching consequences. China, Vietnam, and other Southeast Asian nations are on the front lines of this battle. But it's not just about clothing. The tariffs on clothing are part of a larger strategy to weaken China's economic influence while pushing for domestic manufacturing in the US. However, this strategy has had unintended consequences. As companies shift production to other countries, it's becoming increasingly difficult to maintain the quality, supply, and efficiency that was once associated with Chinese manufacturing. Political fallout in the US and around the world. The fallout from these tariff decisions is being felt not only in the retail industry, but also in the political arena. Democrats and environmental activists argue that the price increases on clothing and footwear will disproportionately hurt lower-impact Americans, further widening the wealth gap. Meanwhile, Republicans argue that these tariffs are a necessary step to bring jobs back to the US and counter China's growing global influence. Internationally, countries that heavily rely on US imports are bracing for a slowdown. Vietnam, Bangladesh, and Cambodia are heavily dependent on the US market, and any disruption to this trade flow could have serious consequences for their economies. China, too, is strategically shifting its focus to markets outside the US as it faces mounting tariffs on its goods. The future of American fashion. The fashion industry is on the cusp of major changes. With the rising cost of imports, American consumers may begin to feel the financial strain. Brands might try to offset the price increases with cheaper, lower-quality products, leading to a potential shift in the types of clothing available. As American brands continue to explore production options outside of China, the landscape of the US fashion industry may look very different in the next decade. The clothing tariff war may seem like a distant economic issue, but it's set to impact every American. Whether you're a fan of Nike, Adidas, or a budget shopper on Shein, your wallet will feel the sting as prices rise across the board. The question now is whether the US will be able to strike a balance between national interests and consumer affordability. Will these tariffs succeed in bringing jobs back to the US, or will they simply increase costs for the average American? Only time will tell.